Are you a struggling trader? Do you find yourself making the same trading mistakes and falling into a cycle of losing money and then getting a few small wins only to fall back into another cycle of losses? Do you spend hours on learning technical analysis and patterns only to find out that it doesn't really improve your actual trading? Well, in this video, we're going to talk about trading in the zone and getting your mind to a place where you can take a step back from your current trading psychology and unravel some of the paradigms that are causing you to not be consistent. This video is going to be based from the book of the same title, Trading in the Zone by Mark Douglas, which I highly recommend every trader should read. I want to go over the 5 fundamental truths about trading in the zone, and by the end of this video, I want to have you questioning everything you think you know about trading psychology. The first fundamental truth is that anything can happen. Anything can happen means just that. There are always unknown forces operating inside of the market. Your trade can hit your stop loss just as much as it can hit your take profit. A lot of traders will hesitate placing a trade, or they'll be in a trade and either stop out prematurely or take profit too soon. If anything can happen, then that means that your trade can absolutely go to your profit target and beyond. Now, this also means it can hit your stop, and this is why successful traders always practice risk management and sizing. You use your edge to find winning setups and then execute, knowing anything can happen, and not operating out of fear or greed, but simply from the information that the market is giving to you at that time. The second truth is that you don't need to know what will happen next to make money. Traders who think they know without a doubt what will happen next are lying to themselves. You don't need to know what's going to happen next. You don't need some fancy indicator to try and beat the market, because the market is only information. It's not an opponent. What this means is you have your edge, and out of the next 20 trades, 14 could be winners and 6 could be losers. What you don't know is the order that will happen. You could win 2 and then lose 6 in a row. Traders who understand this keep trading the same and win the next 12. What struggling traders do is look at the 5 to 6 losses they just took in a row and they think, I have to know what's going to happen next. I have to know what the market is going to do next in order to be right. And then you interpret the information as threatening, and you find reasons why a trade won't work, and you hesitate to get in, and you can't execute because you're afraid of losing. The truth is that the market just gives you information and you're playing your edge, which only gives you a higher probability of winning, not a guarantee. Now, the third truth is an important one. Your last trade has nothing to do with your next trade. The fact you just lost 50% or just made the largest profit ever will do nothing for your next trade. Your last trade had different market factors affecting it, and the next trade will be under completely different market conditions with different traders influencing price in different ways. If you took a loss, it in no way means that your next trade will be a loss. But in our fear, we interpret the market information as threatening. On the other side, after a big win, you might look at the market and decide what it's going to do next. After all, you're on a hot streak. How can you be wrong? But the market will always humble you. Trust me. As a trader, you must think in probabilities. Simply put, it is our job as traders to interpret market information and use our edge with proper risk management to execute trades based on what the market information is showing us at that time, understanding that anything can happen. Traders will get in a trade with no stop because they believe it will be a winner, and when it goes the opposite way, they end up bag holding, thinking the market will go the way they planned it to. This is why you keep losing. If you know your edge has a higher probability and you know you will be wrong sometimes, then stopping out of a trade is part of the process. And what's more is that losing a trade has only put you closer to your next winner. When I buy calls at a demand zone, I'm playing my edge, that buyers will step in and I can capitalize on this movement. I place my stop at the bottom of the zone and I let the trade play out. I see demand zone bounces every single trading week. So if I stop out, that means nothing. And my next trade, as long as I play my same system, will still have a higher probability of being successful. My edge is still valid. And the last fundamental truth is that every moment is unique. The market is only information. It's not out to get you. It doesn't know you exist. Every moment, every tick, every candlestick you see is independent and unique. Traders across the world influence price. They buy and sell at different times for different reasons. A news headline hits, traders sell in fear, or traders buy in the dip for a bounce back. There's always buyers and sellers, and each think the other is wrong. Buyers think it's underpriced, and sellers think that it's overpriced. What this means is you cannot possibly know for certain what will happen next, so why even bother trying to do that? You will end up looking for reasons why the market will do what it's done in the past, and you won't be fully open to the reality that each market moment is unique. When you fully accept the psychological realities of the market and being a trader, you can let go from the ego of being right or wrong. You don't need to know what will happen next, and you won't need to interpret the market information as threatening and hesitate on your trading. Mark Douglas says it best. When you're at peace with not knowing what is going to happen next, you can interact with the market from its perspective, what is likely to happen next. At that point, you will be trading in the zone where you can tap into the now moment and take advantage of opportunities within the market. So those those are the 5 fundamental truths of trading in the zone. I hope it helps you out. I'll see you in the next one.